I think it is time to kick us off. So, thank you all for being in attendance. We are going to try to cover a lot in a short time in 30 minutes. We will talk about uh, how to do strategic onboarding for looking at merchant risk. So, before we get into the meat of the presentation, we're going to do a few background must-dos. The first is, I'm going to try to make this one less boring than the slide looks. Uh, I'm a lawyer. I'm not your lawyer, nor is Gavin. He's not even a lawyer. So please read the disclaimer. This is not professional or legal advice. This is general information. And if you have any questions, you should seek out professional advice. And if you have any questions for us about the content of the webinar, please feel free to reach out. During the session, feel free to submit your questions using the question section of the control panel. They'll be answered to the extent that we have time. If we don't have time, we will reach out to you later separately. We'll follow up offline. Separately, check out the handout section of the control panel for additional information. And lastly, this session is being recorded, and that recording will be available in the next few days. So if someone from your organization was unable to attend, but you think they might be interested, absolutely feel free to share. So who are we? I will introduce myself, and then I will punt it on over to Gavin. My name is Niev Lewis. I am G2RS's Vice President of Compliance Operations. By way of background, I am a regulatory attorney with a specialty in food, drug, and pharmacy law, although I've also spent a lot of time in other high-risk areas, but food, drug, and pharmacy law are my sweet spot. And I am not the expert on the call. That is Gavin. I will let him introduce himself.
Oh, hello, everyone. I'm Gavin Andrews, Director of Product Management. I've been at G2 Risk Solutions for over 14 years, where I've led the creation of our transaction laundering detection, our platform services, and our onboarding product suites. I'd like to thank you all for joining today.
Okay, so let's talk about the agenda. So first, we're going to look at what is the payments ecosystem. What's it doing right now? I named it the postmodern payments ecosystem because I thought that was fun, and I was a liberal arts major. Then we're going to talk about the merchant life cycle and the role of the merchant life cycle when you're looking at fraud. And then finally, we're going to talk about onboarding best practices and specifically how those fit into G2RS's global onboarding solution. So let's jump straight into the postmodern payments ecosystem. So we now, we've been in a post-COVID world for a while, right? So, and what does that mean? Well, during COVID, there was a huge boom in e-commerce, and that growth has really continued. At the same time, you have enhanced speed requirements and enhanced speed capabilities. And then finally, you have this, like, we've all attended webinars or heard people talk about it, the rise of artificial intelligence. So going into what do those mean for the payments ecosystem, e-commerce boomed in COVID. And then there was sort of like, is it going to revert to back what it was? Hasn't really, no. So between Q1 2023 and Q3 2024, the US e-commerce sales growth at least doubled the total retail sales growth. Probably did in Q4 as well, but that would have required me doing math, so I didn't add that in. But so you have this massive boom in e-commerce that has continued. You also have this enhanced speed capability and demand, right? So we have modern APIs, we have cloud-based platforms that really enable near instant account setup and payment processing. So the time to first transaction is growing and make more quick and is expected to be more quick. And then finally, you have this game-changing technology, and that doesn't happen very frequently, right? Like there are things that change in the system, but AI is a game-changing technology, right? And the large language models and machine learning, they are now widely used. They're widely used to create websites. They're widely used to create content for websites. They're also widely used on the payments industry side, looking for patterns, looking for fraud, you analyzing data.
Yeah, and really all of these trends represent a big opportunity for payment companies. But the competition that we see for new merchants is real, right? You can have merchants that will often apply for multiple accounts at once, and they're going to select the one that gets back to them with approval the quickest so they can get to their first transaction. And we see that the length of the merchant journey is a key factor and really common as a KPI in a lot of underwriting programs. So being competitive and taking advantage of this opportunity means reducing friction and being able to make good decisions at underwriting quickly.
And we jumped ahead a slide, so we're going to go straight into that one. So, uh, what does that mean? In addition, that means, of course, that there is a more space for fraud to and violative merchants to take advantage of those three things that we talked about. They can take advantage of the growth, the demand for speed, and definitely for AI, right? So, regarding AI, fraud has become more sophisticated. Um, fraudsters can create very high end and hard to detect websites that look good, right? Like the uh, bogus websites before, bank sites, front sites, they look kind of clunky. Now they look good, and they can create those at scale. Same thing with synthetic identities. They can create those. You also have transaction laundering as a service. And those are businesses that are really like their job is to create bulk websites, bulk merchants, bulk identities at scale, and really try to infiltrate the payments ecosystem. So you have fraudsters using this new game changing technology to take advantage. At the same time, you've had this massive push for growth. You have this need for speed, and so it's all sort of like like a tinderbox for fraud. Um, Experts are forecasting that fraud is going to grow, right? And 44 billion for 2024. They're anticipating it will go to 107 billion by 2029. So shouldn't be a surprise to anyone. The haystack is getting bigger, and the needles are finding their way in.
Yeah, I mean, in a lot of ways, the fraud and transaction laundering perpetration is becoming easier. The tools you mentioned need to increase the ease and speed on the merchant side, but also that the increase in volume of merchants can create stress on underwriting processes and systems that are not equipped to handle the speed and scale that is coming with this growth surge. And that can make it harder to identify bad merchants.
Absolutely. Now we can move on to the next slide. So, what are regulators doing about it, right? And whenever there's fraud, whenever consumers are being harmed, you're going to have regulatory action. And we are seeing that. And basically, the idea is that regulators are putting pressure on intermediaries to make sure they're not facilitating fraud and make sure they're not allowing violative merchants into the ecosystem. Back in March 2024, you had the Global Fraud Summit, right, held in the UK. Had 11 countries participating, as well as Interpol, the multi-country police force, as well as the EU was in attendance. And it was really talking about how to deal with fraud and scams and that sort of thing, and then come up with best practices. You also have countries passing laws that really specifically put the burden on intermediaries to take action. Most recently, and it was just in the last couple weeks, the Scams Prevention Framework in Australia really places a burden on the payments industry, on banks, to make sure they are identifying and addressing, fraud. So that's like, again, that's the push. And then at the same time, you have um, industry wanting to be proactive. They're a little bit reactive, but they're getting the push from regulators. They're seeing, they're seeing what's going on on the regulatory side, and like, okay, let's take action now before we have enhanced pressure that is a regulatory mandate. And so one example of that would be Meta, in the last year or so, it created something known as the Fraud Intelligence Reciprocal Exchange. And it is essentially a portal where they are working with banks in both the UK and Australia, two countries who are really, the regulators have made it clear that they care about fraud. And so Meta has this FIRE, Fraud Intelligence Reciprocal Exchange, that it's a portal. It allows banks to share information about fraud that has been tied to Meta's platforms. So yeah, maybe there's a pop-up scam on Facebook. They can share that information and that allows Meta to take action. So you see intermediaries taking action before they get regulated. We are going to talk about the merchant life cycle. And its role in its role in all the stuff that we just talked about, right? So in order to take advantage of the opportunities for growth in the face of these challenges that we just talked about, it's critical to optimize the merchant lifecycle design. And I'm going to let Gavin take the lead on that.
Yeah, so optimized merchant lifecycle design means being as efficient as possible in identifying and managing the risk of your merchants and adhering to regulations and specific policies of yours throughout the lifecycle. And that really starts with streamlining your application process, making sure that you're collecting the necessary information while minimizing friction. And in onboarding that you execute required procedures effectively, but also that you get the broadest and deepest understanding of merchant risk as quickly as possible. You're determining the path forward that matches your policies and tolerance, whether that be rejecting to avoid the risk, performing deeper reviews, or giving conditional approval to control risk. And that's financial parameters, perhaps, or by setting different monitoring and re-underwriting schedules. And really taking the time to map out the onboarding process and the monitoring process so that your risk levels and risk indicators you determine at onboarding can determine how they enter into the next cycle of the merchant life cycle. Optimizing also comes from managing your life cycle on an integrated platform that can allow you to easily implement these workflows to make monitoring, enrollment, periodic reviews, and re-underwriting easy, right? To be able to apply the lessons you learn from monitoring back into onboarding processes and to easily understand a full picture of a merchant at any time.
So Gavin, what you're saying is if you onboard a merchant and you say run it through an initial scan of some sort, and then you decide, hey, this merchant is higher risk, but within my risk tolerance level, I'm going to throw it into ongoing monitoring, but maybe I'm going to put it into my bucket that has weekly monitoring. Is that the kind of, but it's all on the same platform, therefore easier.
Exactly.
Awesome. Okay, moving along. Now we are going to talk about onboarding best practices and how those are tied to the sort of components that we look at as part of our global onboarding solution.
So global onboarding, first step in this onboarding best practices is understanding merchant risk from a broad and holistic perspective. And that starts with understanding how this merchant has behaved in the past. And given the punishment that's typically applied to merchant, repeat offenses are very common. And this really is an invaluable insight during onboarding. And you want your merchant risk history to be as broad and as deep as possible. Content compliance, you want to understand what your merchant is selling and if it meets the regulations and your risk tolerances. Of course, the presence of any watch list and sanctions list may exclude a merchant or be an indicator of risk. And then consumer ratings and adverse media, where the presence and rating can indicate how the merchant has behaved and interacted with consumers and how that may impact you as the account provider. And operational risk, is the merchant mature and capable at operating at the scale that's expected given at the application. So Neve and I are going to go through a couple of examples of how each of these signals can be indications of merchant risk.
And before we move on, I just want to highlight that, and Gavin, correct me if I'm wrong, but these are signals, right? So some signals may have a greater weight than others, and I'm sure Gavin will be touching on these as we, go through our examples. But, hey, a merchant risk history where it was tied to transaction laundering repeatedly might be a deal breaker. Whereas customer reviews, if it's a business that no one likes, like, health insurance, maybe it's just an interesting data point, but really not very important in light of the business model. Is that right?
Yeah, it's not just about being holistic, it's about being able to interpret the signals well and be able to, as quickly as possible, differentiate between the high risk and the low risk merchants. All right, our first example comes from merchant risk history. This is an anonymized image of an adult dating website. Now, the merchant was being evaluated for a merchant account during onboarding. And while the specific type of business here might be in line with the acceptable business categories, the history is not, right? The merchant risk history reveals that this merchant is connected to two different prior transaction laundering cases for marijuana and also for poppers, right? Both in the illegal drugs category.
And if we click through a couple times, you can show those images of there's the first violative merchant, and there's the second, right? Those are both because of our merchant map that goes back 20 years and is in payments focused. We had those records of those two transaction laundering leads that were confirmed connections to the merchant that was in applying for onboarding.
Yeah, and this section gives you insights, the merchant historical behavior from the most comprehensive merchant risk database in the industry. It also gives you the opportunity to optimize your onboarding decision making by quickly reducing the risk you don't want to take, and conversely, identifying merchants that have a long history of good behavior that can give you confidence with lower risk.
So the next thing we're going to look at is content violations. And of course, that is something you're going to care about when you're looking at your merchants. And that's something that happens during ongoing monitoring as well. One of the things that is important for onboarding and is sort of critical to G2RS's global onboarding solution is looking for those hidden content violations that might be on an otherwise really sort of non-violative merchant or a merchant for whom your risk tolerance is absolutely okay, right? So the example on the screen is an adult toy shop. Um, and that might be absolutely within your risk tolerance. The problem with those merchants is sometimes they have tainted nutraceuticals that are really a small subcategory of what they're selling and really not a game changer, right, for them. They also can sell, like the merchant on the screen, something like Comagra oral jelly, which is a unapproved drug in the US. It contains sildenafil, which is the active pharmaceutical ingredient in Viagra. um, and that might have that one product, and you want to know about that at onboarding because you can very quickly get assessed for that kind of product, either the tainted nutra, where we've seen an increase in assessments, or just a prescription only drug living on an otherwise non-drug website. So that's the kind of thing that you want to know about during that initial scan, so maybe you choose to continue onboarding that merchant, but you say, hey, remove that prescription only drug, or remove your nutraceutical site because it has several tainted nutra, right? Similarly, if we click on one more time, you will see a cosmetics website, right? Cosmetic websites are historically pretty low risk, right? There's usually not much bad on a cosmetic website. Even in the world of CBD, per the FDA, is permitted in cosmetics, right? So CBD might be a higher risk product, still might be fine in cosmetics, depending on what jurisdiction you're in. But there are a grouping of tainted cosmetics that have been flagged by regulators, whether it is in the US by the FDA. They have a list of cosmetics that have been found to contain mercury and or lead, neither of which you want in your cosmetics. And then the UK and Australia, other countries really do test these products. And so this product on the screen, otherwise pretty benign website, right? Focusing on cosmetics, but it contains this one product that has been tested and found problematic by the FDA, found to contain either mercury or lead, and the packaging is identical, right? So that is the kind of thing that you might want to know about in your initial scan.
The next one is watch list sanctions and legal. And this merchant here is an example of a merchant that received an FDA warning letter for products containing undeclared prescription ingredients of sildenafil and tadalafil, which are both part of the erectile dysfunction category. And this is back in 2022. And after this letter was delivered, the merchant was added into G2 risk solutions monitoring and flagged for multiple risk issues for both content compliance and for transaction laundering, where this merchant continued to keep up the prohibited products when they joined, but also that they were operating multiple websites with the same merchant account. And identifying alerts from watch lists, of course, can identify both completely ineligible merchants, but also valuable risk insights. The global onboarding solution includes an extensive set of up-to-date watch lists and sanctions lists that increase your signals about known violators. Fourth one here is the consumer ratings and adverse media. This is an anonymized image of a merchant that has come online as some online next slide, please. This has some online reviews for consumers indicating that they are unhappy with the billing practices of the site, that they have inadequate or misleading customer service. And this can be an indicator that the merchant, of course, is defrauding a customers and maybe a serious issue for you. But while this example may look clear, reviews are written by consumers and they're not always clear indicators. There can be certain industries that no one likes. There can be certain consumers that are always dissatisfied. And there can be falsified reviews. So while this is an important signal, a holistic approach to evaluating this is important. And last, operational risk. When a merchant applies for an account, you should be evaluating that merchant for whether or not they're prepared to operate as expected. And this particular site was lacking a complete set of business policies on the website and had other indicators of immaturity. It turned out to be laundering transactions for this gambling website we've anonymized here. Click the next. Now,
That's us protecting the gambler.
Operational risk signals can be fairly common in a growing e-commerce space where merchants might be just new merchants and they're not really fully operational or they're not mature enough in this sense. But it's also can be a key indicator of future behavior that the merchant is not going to be in compliance. And you need to be able to interpret these with meaning in order to have an effective decision-making process.
And correct me if I'm wrong, but operational risk, it could just mean it's a new merchant, and new merchants could be a huge growth area, especially for some payment providers. So it's something that is a signal, but it is not necessarily a deal breaker. Unlike maybe your merchant risk history, where knowing what the merchant has been up to in the past 5 years, and if it's not good, might be a deal breaker.
So bringing it all together, the next step is evaluating merchant risk, right? In global onboarding, we do this via the Compass score, where merchant risks are evaluated based on the performance across the vectors we covered above, right? Leveraging our unique understanding of merchants and merchant risk behavior over the last 20 years. It's a predictive score and allows you to quickly separate what is the vast majority of low-risk merchants where much of your growth will happen from the bad actors that will cause you the risk that you're not going to be able to, that you want to avoid keeping in your system. So overall,
Oh, I was just going to say, one of the things that I think is cool about this is the configurability. Can you make sure to touch on that?
yeah, we've covered 5 components, but really, when we talk about optimizing the merchant lifecycle, optimizing the merchant lifecycle means finding that balance of compliance and policies and your own tolerance. And that allows you to select what you want to look at, when you want to look at it throughout the onboarding and underwriting, re-underwriting monitoring lifecycle. Global onboarding is configurable. You can select the components you want and really match up with your policies.
And one of the things that I've spoken with clients who say, we have our own internal systems where we look at watch lists and sanctions. Cool. Don't include that one in your in what you're having global onboarding do, right? You can just pull the ones you care about. You can say, you know what, I want a second check on content. I want a deep dive on merchant risk history because G2RS is looking at 20 years across the payments ecosystem. You might not have access to that. Same with the content. You might want someone, taking a second look to make sure that there aren't those hidden merchants, but you may have the other ones covered. That's totally cool.
So overall, to take advantage of the growth opportunity, and the movement in the market, meeting the challenges of onboarding speed and competition, challenges of increased fraudulent and non-compliant merchants and losses, and regulatory demands really comes down to optimizing that merchant lifecycle, right? Having a broad view of merchant risk, complying with regulations and policy, focusing on smart automation that allows you to speed up the process without sacrificing your risk control, and leveraging the output of evaluations to make strategic decisions about not only approval and declines, but constraints, monitoring, periodic reviews, and re-underwriting schedules and paths. And doing that on a platform where you can optimize not only your onboarding decisioning, but you can implement deeper reviews, monitoring, periodic reviews, and re-underwriting in a strategic fashion.
And correct me if I'm wrong, but we can also, it can be fully automated and therefore turn around in minutes, or there could be analyst involvement if you want that sort of deeper dive.
Yeah, thank you, Neva.
Sure.
So we're near the top. We're near the top of the 30 minutes. So thank you all for listening today.
If you have any questions, again, feel free to reach out to either Gavin or myself. Our email addresses are right there. I will also encourage you to download the resources that are in the handout section of the panel. And we are always available to chat about what your particular needs are.